Good morning, everyone. Welcome back to the channel. So today I'm going to show you a tool that is like magic. It's really changed trading for me, and I hope it can do the same for you because it's really the most useful tool that you can use when the market is trending, and it's also very useful to spot any reversals. So it's called the Fibonacci retracement tool, and to get it, you can go here on the menu and you can select Fib retracement. So it might be there. For me, I put it in my favorites because I just use it all the time. And I also added it to my little toolbox here. So the way that this tool works is that you have some extension levels. So these are based on mathematical levels from the mathematician Fibonacci. Those are numbers that are basically proportions of a movement. So the whole movement is 1, and then 0.382, and then 0.382 is the first level, which is about a third of the movement. 0.5, of course, is half of the movement, and then 0.61 is the most interesting. So now, how does it work concretely? The way you use it is that when you see there is an uptrend like this, you can then identify the zone that the market is likely to bounce back off. This could be also paired with the support and resistances, as I said, but also just in and of itself, it's quite good. So what we do is that we take the first point at the bottom of the movement we want, and then we go all the way up and we go from week to week. It's very important to go from week to week to get the whole price movement. And here you could also take this movement. It's like not a big difference, but let's take this, for example. So we want to see, let's pretend that the market would be only here. And now we just want to see until where is it going to go down, because as always, the market never goes straight up. It always has some retracements. And Fibonacci is a way to know that. So what I used to do, and I like to do this, is that I draw a box either here from all those zones, because the price is more likely to bounce back from the 0.5 and 0.61. But it's not always the case. Sometimes it has a really shorter retracement and it just goes back up. So really what we want to do is wait that the price comes here, and anything in that zone will be good. So we see here there's a reaction, and actually that was on the 0.5 of Fibonacci. And there it can be a very good entry point. So if you want to be aggressive, you can put this here, and I like to put this at least below the 0.61 because it can happen often that it just bounces up a bit and then goes down and still hits the next zone of the Fibonacci level. Here, however, it's not the case, and then the trend just keeps going up. So now, as you can see, there is the 0 here, which is basically the end of the movement. So when we go on the trade here, there's no point really targeting this because it's the same high. And that's where the extension levels comes into play. We have two levels that are interesting here. And if you want to get the same levels with me, I will show you in a minute. The first level can be used as a target because the price is very likely to then at least hit this before reversing the trend. And then it's also good to just take a first profit here, or at least secure the trade, to put it to break even so that it's a risk-free trade. And then you can go and target the next extension. So the extension is the same idea. It's based on the mathematical levels that if the price is breaking this high and then the trend continues, it's likely to go to one of these levels, or very often it goes to the 2 levels. So we can see here there is a reaction on that extension exactly, and then it goes straight to the next level. And again, we see a reaction. So you can see it's very precise, like it just touches this, and then right after that, the price has a little pullback on this. So it shows that these levels are really important. And we can see that this extension has a little consolidation before breaking it. So of course, it could be also some other type of level here, but I don't see any immediate support. So this is the idea. And as I said, the next extension is very nice to just take a final trade TP, take profit. And then we can simply move on, close this trade, and again, pull another little Fibonacci level. And we see, okay, now it looks like this is the whole move. The price has made a little candle with a wick, and now it's going down. So to see if it's going to pull back a bit further, we can then just check this. Okay, I feel like this move has already happened, so maybe we just go a bit slower to take this move here. And we see that the price actually retraces back to the 0.5 again. And then there is some candlestick pattern. I will do a video on those at some point because these are very important to know. But basically, this means that the price tried to go deeper and tried to retrace further, but then the people started to buy. So the buyers are now in control with that candlestick. And again, we see here the confirmation that there is a new trend. So remember the market structure I talked about in the previous video. Now we are making again lower low, lower high, lower low, lower high, lower low, and then we break that mini downtrend with a new high that is higher than this and a new low that is higher than this. So now we can assume that the price is going to continue the trend. And again, we can put the stop loss there, targeting the first extension or the second one. This is a bit of a conservative entry. If you want to be more aggressive, you can just enter on this candlestick pattern. And as you can see, your risk to reward would be really much better. But let's say we're conservative and we just aim this. And now if the trend continues, it is very likely that the price will hit this. And yeah, it does hit it in about, yep, half an hour. So that's a really nice trade again. However, it's worth to note that the Fibonacci levels work pretty good when the market is trending. But if we would find an area where it's choppy like this, then the price is usually not just respecting you. We can see here, it just goes back up. We can see, oh, maybe this is a reaction, but then it goes down again. So that Fib level wouldn't work. And if we would try another one here, thinking it's going to go down, it's the same. It just destroys it. So that's the idea, that you really want to use this tool when it's a trending market to identify the trend. Once again, it's higher highs and higher lows, or lower highs and lower lows. So that's for the uptrend. Another thing that's interesting to remember is that when you see that the price starts to drop below your extension, your 0.61, then it's very likely that there is something wrong with the price and that it's going to go down. So if the price were to do something like this and then keep going, then it could have a deeper retracement, which happens, but most likely it's then just the start of a downtrend. So we wanna get out of the trade. So that's why I recommend just putting the stop loss a bit below the 0.618, because that's kind of the last level where it's actually interesting to enter the market. Think of it as a discount. If you see something that is more than 60% discount, if it's 80% discounted, then probably it's because the product has some problem and you shouldn't be buying it. So so that's the same idea. It's a very interesting discount on the price when it's in that zone, 50% to 60% discount. But then if it goes beyond that, most likely then the trend is reversing and you're wrong, which is fine. It's very common with the trends that they reverse. So we can just try and move on with this. And here we can see that there is a new high forming. So that's for the uptrend. And now let's try to find some downtrend example. Yes, so for example, here I think we could have a nice one. And there you want to do the opposite. So you click on the high and you go to the lower part. And there it's exactly the same, but reverse. The price goes down and then it goes back right on the 0.50. So this is the same box that we can draw. Some people call it the premium discount zone. And there would be an absolutely beast entry for a sell. However, if you want to be a bit more conservative, you can just wait to see that huge rejection candle off of that level. And then you enter for your short. And you can just simply put the stop loss here and target your extension. So then that's a nice 1.5. It's not like amazing risk to reward here because we were quite conservative, but sometimes it's better to wait for confirmation and just be a little bit safer rather than jumping in on a trade and then just to see the price go all the way up to the 0.61 before going into your direction. So that's something you want to pay attention to. And the last thing I want to show you is that fib levels are also something that work on all the time frames. So here we're on the 1 minute, but it can be used to also define a level that's interesting for the higher time frames. So for example, let's just go back to here, and we can see, yeah, we can just go here and see that there is a big level, and we have been retracing. Okay, this has retraced way beyond. So I think this is the retracement of this level, yes. And as we can see, there was a sharp price move down on the 0.61, and then it kind of hesitated a bit before bouncing back up. So here, when we come and see this, it's a zone that is very interesting, and we could potentially just wait for the price to go back on the 1 minute to see if there is something that could be potentially a buy. Let's see if the price goes at some point. It probably would. Okay, it's not for now, but the idea would be that if you see a big fib level on the higher time frame, you need to pay attention to that zone because it will most likely act as a very big support as well. And paired with the supports, it's something that's very important. And yeah, we could see here that from the 15 minutes on the 1 minute, there was a double bottom actually. So here we can see a very clear double bottom, which I will also mention in other videos. And then the price skyrocketed. So this is something that's also good to remember, that you can just draw the zones on a higher time frame whenever you see them, and then those zones can be useful. So you would probably put a premium discount down somewhere here and then wait for the price to retrace. And here, when we go down to the 1 minute or the 5 minutes, we will see again probably some things happening in this zone, and we just want to wait that the price actually breaks out of this zone. It can be high, yes. So if it starts breaking out like this, then that would be a great entry. And again, we can use the fib level to just go get a little bit of a discount, so we don't just jump right in on that big candle. We wait for the retest, and then only then we enter, and we get a much nicer and safer entry with a good risk to reward. And that's pretty much it for the Fibonacci tool. I hope this was useful. Feel free to try it out, and if you have any questions, let me know in the comments. Don't forget to subscribe, and thank you for watching the video. See you next time.